Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday, the 1st of February, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So headlines this week, Phil. We've got headlines from Motor Trader, AM Online, Auto Retail Agenda, Car Dealer, as well as Fleet News, Asset Finance International, who I think might be making their show debut today. Yeah. And our good friends at Motoring Research. So that gives a flavour of the number of stories we've got to cover this morning.
And there's been a lot, hasn't there, this week already? I mean, there's been quite a few headlines this week.
Yeah, I mean, stories this week. So it includes Pendragon hinting at an upturn in its fortunes in 2020. Although it's moving to close some satellite Vauxhall sites. We've got new research on why buyers use multiple car search websites. Got an interesting story about PSA introducing a CO2-based bonus system for its dealers. EV sales predicted to hit 100,000 units in 2020.
There, Curtis.
Yeah, sorry. That was a bit of a spoiler alert, wasn't it? We've got some good news for dealer rankings in Google ahead of the March plate change. And we've got a roundup of the most recalled car brands in 2019. So stay tuned for that.
I mean, last week was a good week, wasn't it? I mean, good podcast with Robert. I mean, some great feedback on the interview and obviously what Robert shared within the interview about the acquisition, the saviour of jobs, what's happening in terms of the VW world as well. It was quite an open interview, and we didn't get into the politics too much, did we?
No. I mean, Robert Forrester is always good value whenever you interview him because he shoots straight from the hip. And it was interesting what he was talking about, his view on the post-Brexit market and mobility as a service. I mean, I thought that was quite interesting. He didn't have much truck for any suggestion that the trend towards car sharing would be anything to actually look out for and anything that will potentially grow and become an established trend. He wasn't a fan, was he?
No, and we're not going to mention the football either.
Well, we could do, couldn't we? Because there was a bit of interplay between him and Dash over that, wasn't there?
Yeah, I mean, Dash is always fantastic on the podcast. We've had Dash on a number of times, and I think I said it on the show. There's always a little bit of banter in the social space between Dash and Robert, particularly around the football as well. But Robert managed to get that in on the podcast, and great. It's what is good is that we know that Dash does listen because we didn't say anything about it, and obviously Dash heard the podcast and reacted. But again, I mean, Dash is another one that does support the podcast and has been on as well as us, hasn't he?
Yeah, and we've had a recent string of some interesting interviews, which they're all available on motortraderadio.com, so you can go back and have a look. But over recent weeks, we've had Mark Lavery, Chief Exec of Cambria Autos. We've had Dash Gupta, obviously from Marshalls. And Stuart Folds from Trust Ford. So some good names there. And we can hint at another couple of interviews that we've got lined up for the next over the coming weeks. We can't say who they're with, but they are two big hitters, aren't they?
Yeah. And there's probably a lot to talk about. I mean, we are recording ahead of the date of the exit, but I'm sure there might be one or two sore heads this morning as you're listening to the podcast after some Brexit leaving parties, possibly. That Robert alluded to, but again, there's probably going to be a lot more to talk about, particularly in the coming weeks. We'll have the month's results for January, the first month of 2020, in terms of the new car and new van forecasts. We've got the used car performance coming up. The figures are released on the 14th of February, which will show what the market did in 2019 for used car transactions. And obviously everything that's going on, and you've already alluded to some of the stories in this week with EV. And that is certainly a large topic of discussion at the minute around what's happening in that EV sector, and some of the stories do go into some of the detail of that this week. So again, lots for these guys to come on and talk about over the coming weeks.
Yeah, and that really is an open invitation. If you want to come onto the show, then get in touch with us. You know where to find us. We're both on social media.
So the first story is staying with Pendragon, and this is in motortrader.com, and this is ahead of the results, the full year results that are due on the 18th of March, and this is a sort of a trading update talking about Pendragon on stronger footing for 2020 following used car restructuring, and this is on the back of the closure of some of their car store locations, and saying that they've had a bit of an upturn in profits around it.
Yeah, so as you say, it is a trading update, and this is for the financial year ending December 2019. And you're absolutely right. It does follow this period where we've seen the closure of 22 underperforming car store centres, but within the trading update, Pendragon does say that an upturn is expected through the better management of its used vehicle inventory and what they describe as a clear focus on operational cost management. They also point to improvements within car store, the leasing operation, Pinewood, of course, its DMS business, and its US motor divisions, which is interesting because they've obviously been scaling back on their US businesses, but they're pointing to those all performing in line with expectations, albeit a tough market in Q4.
Yeah, and it is they're saying that the board remains confident that the improvement in performance during the second half puts the business in a much stronger footage as they enter 2020. So again, I think there's going to be a lot of anticipation around the full results that we're expected to see on the 18th of March. But interestingly, in the Motor Trader story, they do refer to the fact that there's been no reference to the search or the update on the search for a CEO following the group's departure of Mark Herbert after just 3 months in the job. So I think Motor Trader had to get that in there, and I'm sure that I would suspect that within some of the trading updates on the 18th of March, there may be something about that, maybe not. We'll have to wait and see, I think.
Yeah, it's going to be interesting to see who pops up in that position. So we've got another story from Pendragon, this time from AM Online, and the headline is Pendragon to begin satellite Evans Halshaw Vauxhall closures. Now, again, this is an interesting story, and it's based on AM have observed stories in local press in North Ayrshire and Hartlepool about the local Vauxhall dealerships there, so that they've got in touch with Pendragon, and Pendragon have made a statement that's saying, following proposals by Vauxhall to revise its future distribution strategy, Pendragon has agreed to the closure of a small number of Evans Halshaw Vauxhall sites, predominantly in satellite locations. So there is confirmation there that it will happen, not necessarily that it will happen to the sites mentioned in the story. That remains to be seen.
Yeah, and you can see that, can't you? I mean, it was alluded last week that we expect to see some more changes in Vauxhall. You do expect that, don't you? With the
yes.
PSA,
this has been well and truly flagged up, hasn't it?
Yeah. So I think we're going to see a little bit more of that, and maybe again, referring to the previous story there may be something in the full year results of trading that may tell us a little bit more about that. But it remains to be seen. So staying with AM, and this is again some great research by eBay Motors Group, and this is why people use at least 3 car search sites before buying, and this is the research study that they've been doing with 2,200 car buyers, that's come back that's saying that they use an average of 3.5 car listing websites, and that only 1 in 10 on a single online marketplace when researching what car is available for purchase. So kind of, to me and you, it's probably natural for us to sort of do a little bit of research, but it does expose that the idea that somebody goes onto one platform, stays on it, searches for cars until they find what they want and then move from there, and does sort of highlight that they do multiple searches across various platforms.
Yeah, you're absolutely right. So this piece of research comes from eBay Motors Group's digital touchpoint study, which I've actually seen. I've seen the full research, and it is fascinating. So it's based on research of 2,200 car buyers, and in addition to the average of 3.5 sites that they visit, typically 64% use 3 or more car search websites, and 40% use at least 4 online marketplaces. So it does rather dispel the myth that buyers get locked in, as you say, to one car search website and stay there for the journey. Clearly they don't. So, and why do buyers visit multiple sites? It seems as though it's all about reassurance. Seeing the same car listed on different websites means that they can check the pricing. The pricing's the same, and it just builds the confidence of seeing it displayed elsewhere.
And I suppose it's nice for eBay Motors Group to hear that, obviously, with having Gumtree Motors and eBay, which gives them 3 chances of being in those 3.5 search averages, don't it? So you can understand the logic and the strategy around, obviously, the acquisition and that growth, and obviously, again, remaining as 3 kind of independent search engines for the consumer, that there's a more chance that the consumer will end up on one or more of these platforms.
Yeah, and the message is really for dealers to consider putting their stock on different websites. Don't just put it on one platform.
Yeah, again, maximize their online exposure and ensure that their stock is visible to the prospective buyers on multiple touch points. So again, some of the dealers listening this morning will understand that you can't just rely on one. But again, it's definite research there that does support that logic. So again, great work there. And then
over back to you.
Well, no, it's basically we're into the world of CO2 and EV now, and it just sort of, to start this off before we move on, but obviously the auto retail agenda, a very interesting story, which does kind of support some sentiment that we've heard. And this is a story that's headed that new CO2 based bonus scheme for PSA retailers, and this is a piece of research that they've done with David Peel, who's the MD of Peugeot UK, isn't it?
It is, yeah. Now, this is a fascinating one, because we know, because of the CAFE rules that came into place on the 1st of January, that manufacturers have got to get their average CO2s down. Otherwise, they'll start facing hefty fines from next year. So this story looks at what PSA are doing, and it is found that PSA are linking volume bonuses to CO2 to ensure that the manufacturers within the group meet these new tougher emissions standards. So David Peel's quoted in the story saying, to be fair, we allocate stock with the right mix to dealers, so it's the right mix of CO2. So if they sell what they have got, they will achieve their targets, which ensures we achieve ours. Which, I can understand the thinking behind that, but I just kind of wonder what dealers make of this, because they will want to be stocking the cars that they know they can sell, rather than ones that meet bigger CO2 emission targets. What's your take on this, Phil?
Yeah, I mean, it's something I've heard within the dealer network, and there's been some rumblings around it, and you can understand it, as you say. You can understand the logic with it. At the end of the day, if it's focusing on what the manufacturer's strategy is for the CO2 targets and their sort of the emission standards for the CAFE legislation through the UK and Europe as well. But I don't know. I think some of the pushback is from, let's say, the dealers basically being incentivized or de-incentivized around what vehicles the manufacturers want to sell through their dealer network to achieve their targets of reducing the CO2 average outputs, but not necessarily what the consumers are wanting to buy and what the dealers can necessarily sell to a certain extent. So I don't know. It's a thing that, we've come out of a tough period of new car activity. We saw what happened in 2019. We saw what happened in 2018. We've come into a fresh year. We always knew, with WLTP and then RDE, and then we obviously knew about the CAFE regulation then starting on the 1st of January. There's going to be a continued tough period for the retailers, but I'm not sure that all of them agree that they should be targeted based on their output or their retailing and registration of their vehicles, because again, it's down to supply and demand, and it's if Peugeot, and Peugeot are just one of the brands mentioned here, but they've got to make sure, one, they've got the supply coming through, which will, some of the storage we'll talk about shortly, but if that supply is coming through, but also if the demand is there. You've got to have demand, and if not, we're going to end up with tactical registrations at month end and end of quarters on vehicles that have not necessarily been taken up by consumer demand, and obviously are part of a wider strategy to achieve an average CO2 output, and that's the worry that, if and this is just my personal opinion, but if the demand isn't there for EVs through this first quarter of 2020, and the targets are in place to register those vehicles, but it doesn't happen naturally, then you could be faced with pre-reg tactical registrations of EVs and lower output CO2 vehicles that will then be passed on to the retailers at risk to them in terms of an asset risk. So I don't know whether it's is it a carrot or a stick to a degree with this one. I'm not quite sure.
Yeah, and in fairness to David Pill there, he does say that there's got to be flexibility. So he's quoted as saying if 3008 PHEVs get really popular, we'll have to sell more 108s to compensate. And he goes on to say how the network has been trained. So the sales staff have been trained to encourage customers to look at what they're branding as low emission vehicles. So that's LEVs. David Pearl's quoted as saying, even if you want to drive an ICE, so an internal combustion engine car, as your first touch point, we will be directing you towards a PHEV, and hopefully it will open people's eyes to low emission vehicles. So there is a challenge there, and it looks though Peugeot have come up with a reasonable solution. But let's face it, Peugeot will have 7 new EVs and PHEVs to launch in 2020. So there is a big change there within the Peugeot network, and they've got to be ready and prepared for it.
And possibly, as you say there, for Peugeot, they have been, along with a couple of others, but a leader in that sector.
Yes.
From a network, from an OEM perspective, they've been fairly prominent in that sort of low output hybrid EV sector, and as you say, 20 new models entering for Peugeot. But again, the worry is if this is then adopted by other manufacturers that aren't necessarily as advanced as what Peugeot are in that sector, and that's when it could get a little bit more damaging.
Yep, so more on EVs in a minute, but meanwhile, you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on Apple Podcasts, Google Podcasts, Spotify, YouTube, Deezer, and SoundCloud.
So the next story, and as you said at the start of the show, we're over to Fleet News, and this has created some discussion along with the next story. But the title is that EV sales to hit 100,000 vehicles in 2020, and this is on the back of research and forecasts, should I say, from Drive Electric that are predicting a 260% increase in battery electric registrations compared to 2019, when we only registered 37,850. So that's a significant jump. It's interesting because it's on the back of the last story we were just talking about, obviously with Peugeot and then their incentives of their dealer network, and on the volume of EVs entering the sector. So you can understand the logic behind it. You can understand the drive towards that. But again, it's a huge jump in a market that hasn't necessarily got the infrastructure ready from a charging points across the network, and currently supply seems to be a general concern, I think, at the minute. And we're already approaching the end. We're at the end of the first month of the new year.
Yeah, you're absolutely right, because within the story, it points out that from April, company car tax will be, it'll be zero benefit in kind tax for pure battery electric vehicles for 12 months. So yes, that will be a huge incentive across the corporate sector. But as you say, it's whether or not that sort of demand can be met by the supply. And the story also looks at how company car drivers who may have gone out of company cars might be tempted back in as a result of this new tax treatment from April. So that will create even more demand. But I don't know, that figure to me, 100,000 units, does sound a bit fanciful.
Yeah, I mean, like I say, you can understand the logic around all the legislation changes, all the production changes, and investment from the OEMs. We've got things like the new ID3 from VW entering the market, but that isn't hitting the showrooms until later in the year. So we're already potentially, there's reports of things like the XC40. XC40 generally is under short supply. The new XC40 plug-in hybrid has now arrived in the showrooms. But again, is the supply going to be there to meet demand? And as people have been pointing out, is it legislation that will create the market, or is it consumer demand that's going to create the market? And there's a feeling in parts of the network that ultimately the customer will decide what they're willing to pay for, and whether they're willing to pay for the purchase of an EV over and above what they've usually bought for an alternative combustion engine.
Yeah. Now, Robert Forrester's take on this last week was that he doesn't see any reason why consumers will be paying more for new cars, new electric cars, when their salaries haven't proportionately gone up. Why would they be paying a lot more for a new car than they have done traditionally, purely to have an EV? So there's all sorts of things in play here.
There is, but you can, like I say, you've got the new Corsa, you've got the ID3 and others, entering the sector. You can see where that cost, that purchase price is starting to come down. It's always going to be the case in terms of the wider the choice, the volume, then the costs will start to reflect that. But I don't know. It's that old argument that at the point of which the costs come down far enough and the revenue earned for the government from petrol and diesel taxation goes away, then they'll be looking at alternative substitutes to replenish that, won't they? And that's when potentially long term you could have that impact on the EV sector. And again, some debate that's been taking place this week is about there was a comment on social media about that government to synchronise with their sort of ambitions, and that's talking around the 1 minute there's a plug-in grant, then there isn't, then there's another grant, then it's changed, then there's changes in taxation rules, all sorts of things. And we're going to talk about the leasing sector next. But again, we've been through sort of 12, 18 months of uncertainty and lack of clarity around taxation, which is hopefully coming to a head on the 1st of April with a new table. But again, a lot of time's gone by where there's been uncertainty.
Yeah, and you can guarantee that in the Treasury, as we speak, there's a bean counter looking at the figures from tax revenue from last year and thinking, hold on, where's all that tax that we used to get from diesels that isn't coming anymore? So there will be a shortfall. It will be made up somewhere. So it remains to be seen where. But I rather suspect that this honeymoon for EVs will not go on forever.
Yeah, and a good story that you alluded it again at the start of the show there, that we've had the Asset Finance International on, I think, the podcast reference for the first time, and it is a very interesting story, and probably too long to go into in any kind of detail now, but it's worth heading over, and it kind of follows on a little bit to the last story in Fleet News there, and the header kind of says it all to a degree, that how electric vehicles could reshape the global leasing landscape. And that again, it kind of opens that question around, the leasing sector is going to have to change, because that's where the supply is coming. That's the product that's coming through. And they're going to have to change their profiles to meet one supply of product, but obviously how do you keep up with demand as well from consumers or not in certain ways? So there's a lot going on at the minute.
Yeah, it's an interesting piece. It's worth taking a sort of deeper dive into it at your leisure, but it does touch on how technology means short-term leasing contracts can now be processed from a mobile phone, for instance. So the knock-on effect is the likely further development of subscription-based services or pay-per-use ones. So there's lots going on in that sector at the moment.
Yeah, I think talking about all that car subscription model, that connected vehicles, everything else that's happening, and subscription-based models, not just on new cars, but potentially going into that used car space. And they're talking about plug-in vehicles within the leasing sector is expected to grow by 18.5% during 2019 for the global market, the strongest being in the US and Europe. So again, lots of changes, but you can see where the logic comes from, because that's about supply vehicles from the manufacturers. So again, worth heading over to that story and having a quick read through that one.
Yep. So the next story is from Car Dealer, and the headline is "Dealer Websites Ranking Higher in Google New Car Searches Ahead of March Plate Change." So some good news here for dealers. So this is based on some research done by Honcho, the digital marketing specialist, and they found that if you're on Google and you're looking for a new car, so this is very much the sort of customer experience. You tap in new Audi A3, new Ford Fiesta or whatever, and what they found is that on average, franchise dealer websites are appearing 2+ places higher than they were 12 months ago. So they're appearing higher on that first page. And this is because Google have changed the way that these rankings are being treated. So yes, you've still got the paid for results coming high. You've still got OEMs, the car search websites, the car review websites, but the dealer websites are actually appearing higher, and that's really, really got to be good news.
Yeah, and again, really, I mean, the closing statement kind of says it all, really. I mean, we're now at the end of January. We've entered in sort of halfway point, fastly approaching the halfway point of the first quarter of the year, and they have actually said that the dealers should actually be thinking about their 2020 plate marketing plan now, ready to start rolling it out, thinking about those, what's going to be hitting their sites and the web pages and in the Google searches towards the end of late April, because it'll soon be on us in terms of that March new plate, and we all know you've got to start this year early, and March will be a key point for many dealers listening this morning, and I'm sure there'll be a lot of dealers thinking, God, the way January is looking at the minute, the quarter seems a long way off, but lots of stuff to do.
Yeah, and there's a top tip from Honcho within this story about how dealers shouldn't think in terms of long form content pages. So if they've got new car promotions, have dedicated pages, because that's a lot more Google friendly. That's what Google is looking for if buyers are tapping in new car, as part of their search criteria.
Exactly. So we're on to the and finally for the week, and this is again coming from Motoring Research. We do like our Motoring Research stories at the for the and finally there, don't we? And nice little one at the end.
Yes, and there is a top listing. I think it's probably about the top 20. So this is based on some research by a website called Car Recalls, and they found there were 380 car recalls over the course of last year, and that was 32% higher than 2018. So they've actually broken it down within this story by brand. So I'm not going to do the top 20, but we could actually look at the top 5, because number 5 got BMW. They had 18 recalls over the course of last year, and that was across 19 models, with the 3 Series and X3 most affected. And it's interesting that one 3 Series recall related to models built as long ago as 1999.
I think it's safe to say, though, I think BMW has had one of the biggest recalls of recent years, hasn't it? I mean, that was a big issue last year for BMW across UK, Europe, and the international market. I mean, it was a huge recall for them guys in last year.
Yeah, no, absolutely right. And I'm sure Toyota are delighted they're not in the top 5 here. But number 4, we've got Audi. They had 19 recalls, and that was across 15 models, including, interestingly, the new e-tron, EV SUV. And the recall here was a faulty seal, which was letting in moisture, which isn't exactly what you need in an EV, is it?
No, not at all.
Moisture and EV, bad combination. Number 3, we've got Peugeot with 23 recalls, and as Motoring Research points out, the Traveller and Expert van were the most troublesome models. There was also a major recall on the 107 City car, dating back to models from 2005, and that was a problem affecting the glue that sticks in the glass to the rear door. So that's a bit of a troubling issue. Yeah. Number 2, we've got Citroën, who had 25 recalls, and the C4 Cactus was the most recalled model. And at number 1, with an astonishing 56 recalls, was Mercedes-Benz.
Yeah, and that was across the A-Class, E-Class and Sprinter was the most recalls. So again, Sprinter entering that, like the Peugeot there. But they've obviously point out that the Mercedes recalls, because of very slightest, every slightest defect. So 2 X-Class recalls were due to incorrect data being printed in the instruction manual.
Oh, and you're kidding. They issued a recall for that. I've never come across that before.
I'm being from the dealer background, and things are different these days. I'll admit that, but it was always anything you could do to get a consumer back in front of either the service department or the sales department was always good news, because it gave opportunities for additional work, servicing or sales work opportunities. But I'm just saying, just throwing it out there. We better go to the bottom 5 before we say too much more on that one.
Yeah, so maybe Mercedes-Benz Central HQ isn't overduly alarmed by having 56 recalls last year.
Say that. Take that back. You can't say that. You cannot be incentivised on recalls.
No, absolutely not. But this is fascinating. I mean, as a whole, to see how recalls increased last year, and by such a large percentage, 32%.
I mean, interesting, the bottom 5 as well. I mean, without going into too much detail, but the Lexus was in last place there, at the 20, followed by Nissan in 19th. So you've got 2 of those there. Seat, so still part of the VAG group, in the 18th position. And actually, Jeep had less recalls than Seat, according to the data. And then Skoda in 16th position, and then Mazda in 15th position. And Porsche had a number of recalls, didn't they? Looking at the data there, that in 14th position they had 11 recalls. So, and that was with the 911 and Cayman being the most recalled models. And the Panamera had 4 recalls on their own for things like ranging from short circuit in the air conditioning system to power steering software issues. So fairly significant, I would suspect, in a Porsche Panamera, that one.
Oh yes, yeah. So definitely worth heading over to Motoring Research for that. It's a fascinating story, that.
So again, some great headlines there this week, and very much dominated by the EV and the growth of EV, and some forecasts there around EV. Interesting, both the research from Honcho in terms of that Google on searching for vehicles, and the work from eBay Motors Group around what consumers are doing and how many platforms they are visiting, and again, just the opening stories there from Pendragon, and like I say, 18th of March is their full year results. So again, there'll be a lot of anticipation to see those when they do come out on the 18th of March.
Yep. So stay tuned. As we said at the top of the show, we've got some great interviews lined up over the coming weeks, and we'll be revealing a bit more about that. But in the meantime, you've been listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector. And it's goodbye from me.
And it's goodbye from me.